Good afternoon, I'm Fiona Alford-Williams and I'm the media analyst at Edison Investment Research. I've today been at the Capital Markets Day for Media and Games, MGI, Media and Games Invest. And with me I have here the CEO, Remco Westermann. Thank you very much for taking this time to talk to us, Remco. Now, first of all, today, as well as the CMD, you've released your Q2 figures. And they haven't been quite as good as originally had been anticipated. Can you tell us a little bit more about what's affected that?
Yeah, we are actually pretty happy with our numbers because we were able to gain market share. And I think at the moment it's very important to further grow the company and to gain market share. However, on the revenue side, you don't see that immediately because we are still in a market with headwinds, which means we are still in an economic macro environment that is not great, which means that people spend less money for advertising, and that also because of that the prices per ad units, the CPMs, are lower. And just to give you an example, if you talk about 20 to 25% lower ad prices, you need to make another 25% of revenues up to compensate that. So our revenues are basically flat compared to last year, same quarter, but we were able to gain market share. And we also will see at the moment that the prices go up, that you will see that with the larger market share, you will much faster grow.
Of course. And what are the implications of that for the full year outlook?
Yeah, for the full year, we have reduced our guidance, basically also towards flat. We were more optimistic earlier in the year. At that time, and not only we, but the general tendency was the second part of the year will be better. There will be more advertising spend. But that positivism has come down a bit. We see that consumers don't have spent as much money. We see that companies are still careful. Some of them were able to raise the margins, but they see that they sell less. So the general tendency is still, it will probably also not be so great in the second half year. But what we have seen is that advertising goes really hand in hand with the economic situation, with the GDP, and that we will see advertising budgets going up again. And a bit of it we see already. I mean, the big advertisers like in Procter & Gamble, those kind of bigger ones, we see some, and it's also in the press, that some of them start increasing marketing. Because they need to. They need to sell the product and they need to gain their market shares.
And there are some very big changes going on in the underlying markets, particularly with the forthcoming withdrawal of the identifiers on Google. Does that present a threat or an opportunity to you?
It's a threat to many companies, and everything that's changed is of course always per definition, I would say, a bit of a threat, but it's also an opportunity. And it's something where we see a huge opportunity for ourselves. We're very well positioned with first party data, with our gaming inventory, and we have during the years been investing a lot in contextual data, so working without identifiers. And we believe that the world will not be only one, but there will be a strong gearance towards less identifiers. And in those worlds, you need to work differently than in a world with identifiers. And we see a lot of companies in the sector not really preparing for it. We do. And yeah, let's see. I mean, it's coming. We have seen it with IDFA, but then people still were able to move from Apple to Google. And there's an opportunity in the market, and we're ready for it.
And you're right, when Apple turned their IDFA off, the Google dollars went up. So there is another place for those dollars to shift now, and that's onto connected TV. What's your opportunity there?
Yeah, connected TV is a huge opportunity. I mean, TV or linear TV, traditional TV, sorry, used to be, let's say, the biggest part of the budgets. And what we now see is that a lot of those, channels are moving to digital. But we see also new channels coming up, Netflix, and many things going on there. And the whole CTV, digital video, I would also say, is growing very fast. And poses a big opportunity, of course, as well. And especially with already having a good base of data, with having technology in-house, we also bought 2 CTV platforms, so we have a strong base, also revenue-wise. That's next to in-app, where we're really strong. The second big opportunity that we see in the market, and it's always easier to get into a growth market, of course, than in a decline market.
Yes, and to build on that, what are your medium and longer term ambitions for the group?
Yeah, at the moment, with the headwinds, it's all about gaining market shares, getting more customers on board, innovating the product, executing on what we're doing, also controlling the cost base. I think that's an important part. We have also initiated a 10 million cost saving program, 10 million per year. So I think keeping the profitability, investing in growth, and even if you don't see it immediately on the revenue side, we will see that at the moment that CPMs and things go up again. So that's, I would say, in the short term, and on the mid-long term, we really want to strongly grow our positions in in-app, where we're really very strong already, but still we are leading party in the market, but we still can increase our market share there. And also in CTV, as we discussed before, and all powered by data.
Yes.
And another point, which we also had at the Capital Markets Day, is verticalization. We believe really there's just too many parties in this market, there's often too many intermediaries, and the whole thing is a lot more efficient if an advertiser uses one platform to connect to a publisher.
Yeah.
And that's what we're capable of, and that's what we also will further drive growth.
So maintaining more of the margin with the people who need it at the advertiser end and the publisher end.
Absolutely.
Yeah. Absolutely. Good. Thank you very much, Remco. It's been a very useful day.
Thank you, Pia. Thank you.